All right, welcome everyone to the De-Streaming Financial Planning Workshop. My name is Celeste Porter and I am part of the education team. My job here is to just help kind of facilitate if you have questions for Lily, please ask them throughout the presentation. You don't have to wait till the end, but obviously we'll have an open forum at the end as well. You're more than welcome to unmute yourself. You're more than welcome to put yourself out on your camera. We love seeing faces. We'll make sure we answer as many questions as possible on the actual workshop. If we don't get to them all, don't worry. What I do is I send an email out about 12 to 24 hours after this workshop with the presentation, the video recorded version of it, and then all of our email addresses so that you can then send in questions for Lily or any of the finance team to answer, and then I'll make sure that you get those questions answered. So without further ado, Lily, the floor is yours. Thank you so much.
Yeah, did you already give me access?
I will give you access. Hold on one second for me. All right. You are the host now, Lily.
Great, thank you. So let me see, can you guys see my screen?
Yep, you're good.
Okay, great. Okay, hi everyone. Just wanted to quickly introduce myself. My name is Lily Tran, and I'm the U.S. Finance Manager at Dermalogica. Thank you all for joining this call today. I know the finance team does not really get a chance to interact directly with the PSTs too often. So we've been really excited and honored to have this opportunity to kind of host these workshops for you guys, and hope that you guys have found them useful. We understand that this is a difficult time for you. A lot of you guys have probably been put in a position where you have had to make some tough decisions, whether or not you have probably had to let go of your staff, if you're able to pay for rent for the upcoming months. So just kind of want to let you know that there are a lot of options out there for you guys as sole proprietors, and you are not limited to just one. I'll be giving suggestions on what you can use together to kind of make the best out of your current situation as of last week. And a lot of you may have heard that the original funding for the PPP and the EIDL has run out, but it is expected that they will pass the bill for additional funding. So I do want to walk through the two loans and what you can do in the meantime to prepare. Before we jump in, I just kind of wanted to get a feel of the audience that we have here today. So just kind of wanted to ask a couple questions before we start. Maybe you can help me tally some of the answers, Celeste. So don't worry, there's no right or wrong answers. I think it's just a way for us to kind of understand you guys a little better. How many of you guys here today are independent contractors or sole proprietors?
Let's see. Okay, so we do have a sole proprietor on. If you're not a sole proprietor, maybe you work for one of our national accounts like Hand & Stone, Ulta. This information is great for you guys as well. Anybody who's maybe a booth renter or works for a large spa. So we have two. Okay, so we have a handful of sole proprietors. We do have somebody from one of our larger Hand & Stone accounts. We do have someone from Ulta. So very nice, kind of a mixture of people. And then we do have a student. Well, I love seeing an undergraduate student. You can never get enough information. So glad to see you, Charlita.
Great. So it's a good mix. So second question is, how many of you guys have already put together a cash flow plan?
Okay. Uh-oh. 2. I haven't seen anybody, so we might be all maybe a little green in that area. Not a problem.
Yep. And then the last question is just how many of you have already applied to the PPP or the EIDL?
So what are those, if you don't mind explaining?
So those are the two kind of the federal support loans that we're kind of going over today. They're offered by the SBA. So just kind of getting, before we go into the details of all of those, just kind of getting idea who has already applied.
Okay.
Yeah.
Thank you.
Of course.
Yeah.
We do have someone that already has applied, which is great.
And is it for the PPP or the EIDL?
They said they actually applied for both.
Oh, great. Okay.
Perfect. All right. So maybe you haven't necessarily like heard of these programs, which is not a problem. Linda is part of the process as well, which is great. I think that's probably, and then we've got a couple others that maybe work for Hand and Stone and Ulta. So maybe they're
Gotcha.
not necessarily going for this program, but there's
Yeah.
other things on this workshop that'll help you with some questions you may have as well.
Great. Okay. Yeah, that was helpful to know. So we can kind of get started. So this is just kind of a rough agenda of what we will be running through today. We'll be sharing some financial tips that are kind of good to know during these times. I'll be going over both federal support and state support. So in the last couple of sessions, Stuart has covered California and Ambris has covered New York, New Jersey. Today I'll be covering Illinois, and I believe my colleague Tosh will also be going over Texas on Thursday if anyone is interested in that. It's okay if you are not in these states because there is going to be a large chunk of the presentation that's focusing more on the federal support, which you can all benefit from. I will also provide a link at the end where you can kind of find support by state if we have not covered that state. If we have time at the end, there is also some general knowledge on financial statements that we can share. If not, we have samples that you can download and use from the Dermalogica In This Together website. So that's also available to you guys as well. And then at the end of the presentation, we can also do a Q&A, but if there's any time that you guys have a question during the presentation, please feel free to type it into the chat box and Celeste will kind of let me know. I can't guarantee that I will know all of the answers, so if I'm not sure, I will definitely take a note of it and I will get back to you guys by the end of today or tomorrow. So I know I asked earlier how many of you guys have kind of put together a cash flow plan. Having a cash flow plan is so important at this time, and I can't stress it enough. The more cash you have right now, the longer you can kind of stay afloat during this pandemic. So this will kind of give you the visibility of all the cash that's coming in versus the cash that's going out. So this can be like your expenses of rent, utilities, property taxes, salaries that you're paying, etc. And then that kind of helps you understand where you are at financially. So if you kind of look at this screenshot here, you can kind of see like a little sample of a cash flow template. At the top, you can see all the cash that's kind of coming in at the moment. I don't think many of you guys are doing too many services due to the stay-at-home order, but I know that some of our accounts have been pretty clever and they've kind of started doing home deliveries or drop-offs to their clients for retail products. Some have also sold gift cards to their clients, so then they can use that at a later time when stores are open again. So that's something that would be kind of captured as your incoming sales. One of the things that Dermalogica has also done to kind of help our accounts is expanding our commission affiliate program on our e-commerce website. So we're increasing the commission from 15 to 30%. If you're not aware of this program, so how this program works is that whenever a consumer places an order on our website, they're able to select a PST at checkout, and then that PST will then receive a 30% commission on their order from us. So also, this is an actual check that would be made out to the PST, and then not just a credit that will be applied for future orders. So this is kind of our way of trying to get some extra cash back to you guys. It's also important to kind of implement an emergency budget during due to like the uncertainties of this time, and really review your current expenses and see what you can cut. So what variable costs do you have control over, and what can you reduce in the short term? For any fixed costs that you have, such as rent, you need to kind of proactively communicate with your vendors, your lenders, your landlords at this time. And it's important that you kind of do it early if you foresee like any of these being an issue. I know that this is going to be a difficult conversation to have, but a lot of these establishments are going through the same thing and are probably being approached by others as well. So don't feel like that you're the only one doing this. People are offering, support in different ways, so it doesn't hurt to try to see what you can negotiate. To me, a landlord would probably be more open to negotiating deferred rent for a couple months, or maybe even reduced rent, instead of like losing current renters completely and then having to deal with trying to fill vacant spaces during this time. If this is something that you are interested in and don't know kind of how to start the conversation, we actually have a template that our legal team has created and that you can use as your letter to your landlord. All you really need to do is download the template and then fill in your information for your current situation. We would also kind of advise to kind of take advantage of government relief packages, which is kind of the topics that we'll be covering today. You can hold on to your tax payments a little longer with the extension of the new deadline. Previously, I believe it was April 15th, and it has been extended to July 15th. So this kind of gives you a little more time to file your taxes if you think you still, if you think you will owe money. However, if you think you're expecting a tax return, then I definitely would not wait. There's also statewide assistance that is available, such as unemployment benefits. It's also a good time to kind of review maybe your insurance coverage. Some insurance might have something called business interruption insurance, where it might actually help you to cover some of that lost revenue if your operations has been disruptive. All policies are a little different, so it is definitely worthwhile to kind of talk to your insurance company to see what kind of coverage you have. It also might be worthwhile to even look at your own personal insurance, such as like car insurance, where they might be able to provide some relief at this time, now that most people are kind of working from home and not driving into work. So then also to kind of wrap up the cash flow template, if you look at the bottom of the template, after you've kind of input any credit card payments or loan repayments, you can kind of see what your position is at the end of each day. And then so by using this template, you can kind of use it to plan it forward. And then you can also understand what's due, and then if you're going to have the cash to cover it. If not, it can help you identify when you will run into problems, and then that's when you can kind of see what resources you'll need to kind of help you through it. So the two loans that the SBA is offering at the moment as federal support is the PPP and the EIDL. as I mentioned earlier, the funds have run out, but I think they are voting on this on Thursday. So I think it's expected that it will reopen. If you look to the right, we do have a quick reference table that has kind of a nice comparison of the two loans side by side. I'm not going to go through each one of the detail right now, but I will be going through them in my slides. So once it is available again, I would suggest applying for the PPP loan since it is like first come, first served basis. Also, it is a longer approval process for the EIDL since the SBA has to kind of determine the need, determine like your amount based on the need, and it's not as a straightforward calculation as the PPP. From what I've heard, there is still a lot of applications that didn't get funded in the first round, but on a positive note, the process is expected to be a lot smoother and quicker the second round. The banks were kind of able to learn and automate the process a little bit. It is possible for you to get both loans, but you cannot use the funds for the same purpose. So for example, if you're using the EIDL for payroll, you cannot use the funds in PPP also for payroll. So the PPP was created for many small businesses like your own that are less than 500 people. It is at a very low interest rate of 1%, and your loan payments are deferred for the first 6 months. No collateral or guarantee is needed. One of the great things about this loan is that if you abide by all of the terms, then you can have this loan forgiven and essentially turns into a grant. However, you will need to request for forgiveness after the 8 weeks. Another interesting highlight of this program is that it gives you a chance to rehire your staff. So let's say at the beginning of all of this, you had to kind of shut down your business and let your staff go because you didn't think you'd be able to afford it. This kind of allows you to rehire them and you won't be penalized or have a reduction in wages for your loan calculation if you do this by June 30th. So how to apply is that the original dates for the application were, I think, April 3rd for small businesses and sole proprietors. And then it was open to independent contractors and self-employed individuals the week after on April 10th. You do have to apply with an existing SBA lender, so I would recommend checking with your banks. Previously, most banks were requiring you to be a client with them in order to apply, and then there were some banks that were also accepting all applications, but will be prioritizing their current clients first. They have also added to their list of lenders so that now that you can even apply through other sources such as PayPal and Fundera, which is kind of like a loan aggregator site. So those might be good options for you as well if you cannot find a lender. How the funds need to be used in order for the loan to be forgiven is a 75%, 25% breakout. So 75% needs to be used on payroll and benefits, while the 25% needs to be used on rent, utilities, and interest on mortgage obligation incurred on or before February 15th. A great tip to do is to kind of open a separate bank account to hold the loan, so then it makes it easier to kind of keep track of your expenses and then provide some clean documentation when you're requesting for the loan forgiveness. Next, we're kind of going to cover how the loan size is determined. The general calculation is kind of taking your monthly average payroll cost in 2019 and then multiplying that by 2.5. And then I'll be going over a couple of examples and kind of talking you guys through how to calculate a couple of different scenarios that might apply to you guys. If you were not in business before June 30th, then I think of 2019, then I believe lenders are going to look at your cost in January and February of this year. So when we say payroll costs, that includes everything, even tips and commissions, which is nice. So please note that there is a cap of 100K per employee. So here, the first example that we have here is for sole proprietors and independent contractors with no employees. So the top example kind of shows someone that makes 72K annually. So if you take the monthly average and you're multiplying it by 2.5, then your potential loan is 15,000. In the second example, this person makes 120,000 annually, but as I mentioned earlier, there is a cap of 100K per employee. So then you'll be taking the monthly average of the 100K, not the 120, and then dividing that by the 12 months, and then multiplying by the 2.5 to get your potential loan amount. So another scenario is, this is an example if you do have multiple employees that are working for you. The calculation is still the same, but then you will just be adding up their total payroll costs to kind of calculate your loan potential. So in this example, this consists of their salary, their payroll tax, their health insurance, and then you'll add the full payroll cost together for both employees, then taking the monthly average of everything and then multiplying it by 2.5. So a lot of you guys mentioned that you guys are sole proprietors. So we have been getting a lot of questions from our previous sessions around how your loan would be calculated if you are a sole proprietor and you don't really give yourself a set salary. So then in this case, your salary would then be determined by your business income or your net profit. If your business was operational, I think last year, and then you've already filed your taxes for 2019, then you can find this number on your Schedule C on line 31. And I'll show us a screenshot of that in the next slide. If you have not filed your 2019 taxes, then you can find this number on the net profit line of your income statement. So if you've already filed your taxes, this is kind of like a screenshot of what the Schedule C would look like, and the number that you're looking for is here in line 31. So once you have this number, then your loan calculation will be your net profit divided by 12 to kind of get your monthly average payroll expense. If the situation has a similar cap of 100K, so if your net profit is higher than that, then you can only claim up to that threshold. So for loan forgiveness, you do have to request for this. I don't believe it's very clear at the moment of what the process will be like, since it has not happened yet. But just wanted to kind of give a heads up on what documentation would be needed, so you can kind of prepare beforehand. You will need to provide payroll and bookkeeping records that kind of prove your expenses, which include payroll processing records, payroll tax filings, your 2019 tax forms, 1099 records if that's applicable, and income and expenses as a sole proprietor. So again, if you do not follow that 75%, 25% guidelines on how to use the funds, the portion that falls outside of those percentages will then not be forgiven, and then that portion will be treated as a loan. However, at the 1% interest rate, if that's still a really great loan that you probably would not get elsewhere. So, I mean, if it's between this or just kind of you using your credit cards to kind of pay for things, I think this is a great option if you can get it. There were also a couple of questions in previous sessions around when the 8-week period starts. The 8 weeks starts from when you receive the loan. So you cannot choose to hold on to the money to use at a later time period. It pretty much starts when you get the money. So like I mentioned earlier, although the funding has run out for now, it is expected that they'll reopen at some point. So here are some things that you can be doing now. If you have already applied for the PPP, I would kind of definitely keep in touch with your lender and then kind of give them some time to update you on the status of your loan. And then your loan application is probably already in place in the approval queue. So I think it's just a matter of when they will reopen. If you have not applied for the PPP, I would definitely pre-apply ASAP. You will need to find a lender that is still accepting applications, because there are some lenders that have decided to close their portal to new applicants due to the huge demand in the first round. There are still some lenders that are collecting information and continuing to accept applications now from prospective borrowers in the meantime, to kind of prepare themselves when the additional funding is approved. So it is important that you kind of stay proactive in collecting your documentations and everything now, reaching out to lenders, because once this reopens, the money will probably go fast, especially since the first time around, lenders have really learned from the initial issues, and it's very likely that they'll be able to work through the applications a lot quicker this time around. Just want to see, Celeste, is there any questions so far? Okay. So next we're gonna be kind of jumping into the EIDL. I've gone through the PPP. The EIDL was also kind of created to serve people affected by natural disasters, so which in this case is COVID-19. They are also allowing sole proprietors and independent contractors to apply for this as well. You can borrow up to $2 million. Your loan amount will be determined by the SBA based on your need and your repayment capacity. $25,000 is the amount that you can borrow without offering any collateral. I think originally borrowers were able to receive up to $10K grant within 3 days of applying for the EIDL, and I think you didn't have to pay this grant back even if the loan is denied. However, I think a little later they changed it to just, I think, $1K grant per employee, so that they can kind of support more businesses. The original funding for, I think, the EIDL was about 10 billion, so it was definitely a lot lower than the PPP, which was around, I think, 350 billion. So a question that a lot of people have is that, are you able to apply for both the PPP and the EIDL? I mentioned earlier, yeah, the answer is yes. So you cannot use the funds for the same purpose. If you have already received an EIDL, you have the option to kind of refinance into a PPP. Since it does have a lower interest rate, any amount that was given to you under the EIDL will reduce the amount that is forgiven under the PPP. So how does the EIDL compare to the PPP? With the EIDL, you do have to apply directly with SBA, and it's not through a lender or a bank. Like I mentioned earlier, the approval process can be a lot longer, as they do have to have someone kind of checking your credit rating, your income statements, your tax returns to kind of determine your need, and then your ability to pay it back. Loans over 25,000 do require collateral. Loans over 200,000 require a guarantee, where the PPP does not require any of those. Interest rate is a little higher at 3.75% for businesses, where the PPP is only 1%. With the EIDL, you can defer your payments a little longer, up to 12 months, where the PPP has deferred payments for about 6 months. Yeah.
We have a question.
Yeah.
If you refi your EIDL to a PPP loan, can you then request forgiveness?
If you refi, I believe so, because I think now then it becomes a PPP loan, but you just have to make sure how you're using those funds is still in the same 75-25 breakout. So 75% on payroll, 25 on the rent, the mortgage interest. Yeah. So I think if it's just within those thresholds, then you should still be able to apply for forgiveness.
Wonderful. Thank you.
Yeah. So then going back to the term of the loan for the EIDL, it can actually be pretty long. The reason for that is I think it's just the way that they can make this affordable for small businesses. So they can go up to about 30 years, where the PPP is a 2-year loan. Next, we have, I'll be going over the Families First bill. So this is not something we're kind of suggesting to use as a form of support, but it is definitely something we want to bring to your attention, as this is the law that some businesses are obligated to follow if you have employees on your books effective as of April 1st. So if any of your employees have been diagnosed or awaiting diagnosis of coronavirus, the Families First bill states that all small businesses under 500 people must provide 80 hours of paid sick leave at 100%. If any of your employees have to take care of a loved one or someone that has coronavirus, you're responsible for 80 hours of paid sick leave at 66%. And if any of your employees are unable to work because they need to stay home with their kids due to school closures, then they can get up to 10 weeks of extended leave at 66%. However, I think there is an exception. If your business has less than 50 people, then I think the last point is excluded. So, however, by providing sick leave to your employees, there is some support for you. You will get a 1-for-1 tax credit on all wages, including health care from the IRS. So what this means is that the taxes that you pay for these scenarios will be refunded to you. So I've pretty much covered the federal support. So now we'll be going over state support, specifically for Illinois. One of the options available is applying for unemployment insurance. In general, to qualify for unemployment insurance, you must have lost your job through no fault of your own. You must be available for work. You must be actively seeking for work. And I think you must have not been fired for any type of misconduct. So due to like the COVID-19, this has been expanded, and now I think you can apply for unemployment insurance if you're laid off due to the pandemic, as long as you are prepared to return to work. So there's also been a lot of temporary boosts that have been put in place that you can receive due to the COVID-19, which are you get an extra $600 per week on top of your usual calculated benefit. And I think usually there's like a 1-week waiting period before you can apply for unemployment insurance, but now they have waived that period. You're also able to get an additional 13 weeks of unemployment insurance on top of the usual 26 weeks, so giving you a total of 39 weeks of assistance. So based on previous sessions, I think we've also had some questions around if you're able to apply for unemployment insurance along with the PPP and EIDL. So as long as you're not receiving funds for payroll, you can. If you just want to use the PPP for the loan forgiveness for the 8 weeks, a possible option is that if you decide to kind of let go of your staff after the 8 weeks, then you and your staff can both apply for the unemployment insurance afterwards. So I'll also be quickly going over 2 state programs for Illinois. These are new loans that they were kind of created to help small businesses at a fairly low interest rate. The first one is for small businesses in Illinois outside the city of Chicago. And then I'll also be going over one for just the city of Chicago. I think the reason why they have these separated is to make sure that the funds are distributed properly and it's not going all to a specific area. So the Illinois Small Business Loan was available as of April 1st, and you do have to apply through a local lender. It is a 5-year term at a 3% interest rate, and then payments can be deferred up to 6 months. You can receive up to $50K, which is determined by the average monthly revenue before COVID. Since this is a new loan, I think they're still figuring out to a specialist in Illinois. They said it's typically a range of 1 to 3 months, but they're kind of determining that based on how much funds are available. 50% of the loan needs to be used towards payroll, and you do need to retain at least half of your workforce for 6 months. To be eligible for this loan, you need to have a business outside of Chicago that has made less than $3 million in revenue last year, and you must have less than 50 employees based on the period of October to December of 2019. You must be able to prove that you have experienced at least a 25% decrease in revenue as a result of COVID-19. And you will need to provide bank statements dating back to October of 2019 and your most recent tax returns. So next is the Chicago Small Business Resiliency Fund, which has about $100 million in funding. This was available as of March 31st. The requirements for this are similar to the one for Illinois. There are some slight differences. So this is also a 5-year term, but at a 1% interest rate for the first 18 months. Then it increases to 5.75% after that. You can also receive up to $50K as well. The loan calculation is kind of based off a 3-month average of revenue prior to COVID-19. 50% of the loan needs to be used towards payroll, and you do need to retain at least half of your workforce for 6 months as well. Your eligibility for this loan is based off the fact that you have less than 50 employees and half of them do need to be Chicago residents. Your revenue pre-COVID cannot exceed $3 million, and similar to the Illinois loan, you need to prove that you have suffered at least a 25% decline in sales due to COVID-19. Your business also needs to be located in the city of Chicago, and you have to prove that you were in business for at least 1 year as of the date of the application. This pretty much wraps it up for me as far as federal and state support. Do we want to open it to maybe any questions that anyone has?
I think there was a question about, give me 1 second. It was about unemployment, and I wanted to wait till you were closer to that. Hold on 1 second. Let me find it in. Okay. So, where are you? Okay. I don't know how much we know about this, but would like to know about the new PUA in California launching on April 28th. I guess it's Bill AB5 for misclassified persons on unemployment. I guess most self-employed have been denied unemployment insurance, apparently because of misclassifications. So they're launching a new PUI for self-employed with a 2 to 3 day turnaround streamlined app. Linda, do you mind maybe jumping on and going into further detail about your question?
Yeah, so thank you. I appreciate it. I know it's not Midwest, it's not Illinois, but it's California. And apparently from the last meeting, I think they were saying how there were 3 states that weren't able to comply to the federal demands for opening it up for unemployed and independent contractors. So in California, they worked on establishing this new PUA, which is Pandemic Unemployment Assistance, specifically for self-employed and independent contractors. And the main reason there was some issue was because many of these people were misclassified. And it had to do with, I guess, the state's classifications. And that's why they were all being denied. But this is a whole separate fund, and it's a much more streamlined app, and it's a turnaround of 2 to 3 days. It'll be retroactive, and it's launching on April 28th. But I just wondered if you had any more information about it, and also that when you get this, because you've been denied for regular unemployment, it will still have and qualify you for the same 600 match from the government, from the Fed.
I'm not 100% sure. I'm sure it does. I'll definitely try to research some more. We can send some documentation out. I know this is something that's fairly new, so I don't know how much out there is now, since I don't even know if it's been officially passed. I think it starts April 20th, right?
I think you might have just spoken about it yesterday.
No, last week.
Was it last week? Okay.
Yeah, so I know, I think the first original like unemployment insurance, I know a lot of independent contractors, like a lot of them were getting denied, they weren't getting through. So that's why they passed this one. As far as the detail, I think you laid it out pretty well as far as the terms, but I think maybe we can probably put together some sort of document of some bullet points and probably send it out to the group after as well.
Lily, I was just looking, so I think you're right. This is super new, so the information is changing, obviously, but it does seem that you can get so it's $167 plus the $600 per week from March 29th to July 25th. That's what it says on the website online anyway. Yeah.
Okay, great.
Thanks, Tosh. So everybody, just so you know, Tosh is one of our finance managers as well at Dermalogica. She's just not a voice. The voice comes through. Tosh is actually doing a segment on Thursday for us as well. So thank you, Tosh, for researching that.
No worries.
Yeah, so what we have here, we also have some links that we're going to provide to you. So like I mentioned earlier, if you guys are on the call and you're not from California or Texas or Illinois or New York, New Jersey, so the states that we've covered already, I do have a link here that says support options by state. So you just pretty much select your state on the site, and they'll give you kind of like what I kind of put together for Illinois. So you'll see different state support options other than unemployment insurance on there as well. So I think that's a great resource if you guys have additional questions on what other options are out there for you guys.
All right. There's a question about a heard of a Zenoti grant. It's Zenoti. I haven't heard of it. Sarah, if you want to jump on and maybe go into more detail, because I haven't necessarily heard of that.
Yeah, can you hear me?
We can.
Yeah.
Okay, so I just received something from my boss. I work at Hand and Stone. So I don't know if everybody's eligible, but if you Google Zenoti, you can apply for a grant specifically for people in our industry. And I think they just approved it. So yeah, you can go to that and it doesn't hurt to see if you're eligible. But I think it's for everybody in our industry. So if you look in the chat, you can see how it's spelled.
Yeah. And
so
then,
is it for students too? What is this grant?
I don't know too much about it, honestly. I know my boss says we're getting it through the software that we use, but it looks like it's for all professionals. So you really just have to look it up, because I just applied for it. But
Okay.
It's the application process though is incredibly simple. It's just a 2-minute super basic questions.
That's
Awesome. Thank you.
And Tosh just put up the website on there as well.
Yeah. Let me do that. I'll give you the link.
No, I've just done it. It's cool. Thank you. So it says the application criteria is basically a licensed professional or a W-2 employee in the beauty and wellness industry. Grants are between $500 and $1,000. And basically you're applying to a foundation that's distributing this fund. It seems like it's a little boost, rather than if you own a business and you're trying to cover wages, it's not going to support that. But if you're an individual who's demonstrating financial need based on being laid off, furloughed, or temporary closures, then it could be an additional amount. Perfect. It doesn't say that how much money they have to distribute, though.
There are a lot of great like sources now too, which I did find another link that I will also share with you guys. It's just there's like new like little grants popping up every day for different industries. So I mean, they might not be as big as the EIDL or the PPP, but I mean like they might be anywhere from like 1K, 5K here, which you know, any financial support is, I think, great at this time. So I think there's a link that I'll be sharing with you guys as well to kind of just show you what other options that you can apply while you're waiting for the PPP or the EIDL to reopen.
Perfect. And then if there's any students on, I would look into seeing if there's some forgiveness with your student loans or anything in that capacity. Or, you know, if you are working in an industry, maybe you're not licensed, if there's something maybe that would help with that. So that should kind of, you know, give you some insight for your students. Perfect. Any other questions while we have both Tosh and Lily on? If not, oh.
I have one. I'm sorry.
Yeah, you're fine.
I was curious. I think I had heard that all of these grants and options are going to be above and beyond and not count and won't count towards income for our taxes. And is that correct? And then also, is that still the same if you wind up getting all these funds from all these different grants or sources?
Yeah, so if it is a grant, then yes, usually they are just tax-free and they don't count as like additional income, so you won't have to pay taxes on them. However, if it's so it's different. So if it's like a loan, then it just works as a loan. So you just have to be careful. Like if like for instance for the PPP, if you do follow the rules and then you get that loan forgiven, then that acts as a grant, then it doesn't count. It's going to be tax-free as well.
Okay.
I think the only thing you would need to be mindful of, as far as I know with unemployment, is that is still taxed.
Yes, so that's different for the state support.
Exactly.
Okay, and then if you wind up getting all these smaller grants, like a whole bunch of different ones, you're still allowed to use them all, not similar to if you get PPP and EIDL, that they can't be used for the same purpose?
I think the one that's in particular is just like if you're using them for payroll. So I think a lot of them, you just have to kind of really check. I think just particularly, you know, you have to be careful, like just having that proper bookkeeping and what you're using it for. So if you're using one for, you know, I would strictly use one for like just salary and just kind of keep those expenses like separate of what you're using it for, just to make sure if you are trying to, you know, apply for forgiveness, then this is kind of like the parameters that you have to kind of follow.
Okay, and then follow up is, do we have to have separate bank accounts or like a new bank account for each one of these or not?
You don't have to have a new bank. That was more of a tip for you. It's just easier if you have everything all in one place. So then later on, when you do have to provide documentation for forgiveness, it's easier to kind of keep track of that for both yourself and for the person that you're applying for the forgiveness to.
Thank you.
I have a question.
Yeah.
Do you guys know any grants for students? Because I was supposed to get a second job to pay off my loans later. I graduate in May and 6 months later I have to pay off my loans. I was just wondering if you guys have any like grants that you guys know about for students in school.
Not that I know for particularly for students, but like again with the loans, like it doesn't hurt to kind of reach out to see if there's any like loan deferments. So because of the COVID-19, I think there's a lot of lenders that are giving some like a period of time where you don't have to pay back your loan right away. So it's like a deferral of your payments. So that kind of buys you, you know, a little more time to kind of earn that money.
I sent a link into the group. We received one from one of our administrators, and it's for students. It's $1,000 grants. So you can probably check out that link or contact us for
Thanks,
information.
Shilpa. That was awesome.
Yeah. So like I said, like you can just really search. So there's so many new grants that are popping up like during this COVID-19 period that are like honestly like popping up as like these issues occur. So there's probably a lot of them out there that I haven't even like heard, seen or researched yet, but definitely, you know, it's worth the time to kind of just like Google and see what's out there for your situation.
Thank you.
Perfect.
Yeah,
Thank you. All right.
Thank you.
Thank you, everyone. So we, I think, are going to close. Does anybody else have any questions before we close up for the afternoon? Did everybody get those links that like Shilpa put in, that Tosh put in? Just, you know, those smaller grant programs that may help some individuals.
So let's maybe you can just maybe keep note of like the links that were sent out, and then maybe we can send that in like the recap of like this session.
Yep.
So then people can have it for reference.
You got it. Perfect. Let me copy those over. As always, we really appreciate everybody's time. We know that this has been a challenge and that it's definitely different from anything we've ever experienced, but we really appreciate all that you do for this industry, and that we hope that we're giving you each enough support to really make you feel successful during this time. And we are here for you for everything. And please have a lovely rest of the day. Stay healthy. Wash your hands, as everybody's saying. And I'll be sending out a follow-up email hopefully by this evening, if not by tomorrow morning. And we'll add those links in like Lily has suggested, and the recording and everything else. So thank you guys so very much, and have a lovely rest of your afternoon.
You too.
Bye, guys.
Bye.
Bye.